What if the money in your bank account isn't the final form of money? What if it's just a temporary, fragile layer in a much larger, more complex system? For decades, we've trusted this system, but cracks are beginning to show. Now, a new technology, Bitcoin, is forcing a global conversation about the very nature of money. Is it a return to a forgotten standard of value, as Saifedean Ammous argues in the Bitcoin Standard? Or is it the foundation for a completely new, multi-layered financial world, as proposed by Nik Bhatia in Layered Money? The answer could redefine wealth, savings, and power for generations to come. To understand where we might be going, we first need to understand where we are. The money we use every day, the numbers on our screen, the cash in our wallets, feels real. But it's what's known as fiat money. Its value comes from government decree, and more importantly, from our collective trust in the institutions that manage it. For a long time, this system worked, but it has a fundamental weakness. It can be created, manipulated, and devalued. This isn't a bug, it's a feature that governments have used for centuries, from Roman emperors clipping the edges of gold coins to modern central banks printing trillions of dollars. This creation of easy money fuels cycles of booms and busts, erodes the value of our savings through inflation, and encourages a culture of short-term thinking. Why save for the future if you know your money will be worth less tomorrow? This is the world of a high time preference. For centuries, the anchor against this was gold. Gold is hard money. You can't print more of it. Its supply is governed by geology and physics, not by committees and political whims. This scarcity and reliability are what made it the foundation of the global economy for a very long time, the era of the gold standard. It enforced discipline. It encouraged saving and long-term investment, a low time preference, because people trusted that their money would hold its value. This is the core argument of the Bitcoin standard. The book makes the case that we've lost our way by abandoning hard money. It views the last century of fiat currency as an anomaly, a period of unchecked government power over the economy that has led to instability. And it proposes a solution, a return to a standard, but not a golden one, a digital one. Bitcoin, in this view, is digital gold. It is the hardest money ever created. Its supply is absolutely fixed at 21 million coins, a limit enforced by a global decentralized network that no single entity can control. It is a predictable, incorruptible, and neutral store of value in a world of unpredictable monetary policy. It's a lifeboat, offering an escape from the continuous debasement of fiat currencies. This vision of Bitcoin as a replacement for gold is powerful, but it also raises questions. How could a system built for ultimate security but low transaction speed possibly function as a global currency? This is where a different but complementary perspective comes in. Layered Money offers a blueprint. It agrees that the current system is fragile, but describes it as a pyramid. At the base is the most trusted asset, historically gold and today the US dollar. The layers built on top of that, from central bank reserves to commercial bank money to the digital dollars in our accounts, get progressively less secure. The financial crisis of 2008 was a stark reminder of just how fragile those top layers can be. Layered Money proposes that Bitcoin isn't here to just be a new gold, but to become the new base of the entire pyramid, the first foundational layer of a new monetary system. This is a crucial distinction. In this model, Bitcoin itself doesn't need to process every coffee purchase. That's not its job. Its job is to be the final, ultimate settlement layer. Secure, decentralized, and incorruptible. The speed and scalability come from the layers built on top. The second layer could be something like the Lightning Network, a technology that already allows for millions of near-instant, near-free transactions that are later settled in batches on the main Bitcoin blockchain. But it doesn't stop there. This vision sees a future where even central banks could build their own digital currencies, their CBDCs, on this second layer. Commercial banks could then issue their own fully backed stablecoins as a third layer. The key is interoperability. In this system, you could seamlessly move between these layers. You could hold Bitcoin for long-term savings, use a CBDC for paying taxes, and a commercial bank stablecoin for daily spending, all within a single, integrated system. This isn't about forcing everyone to become a technical expert. The complexity would be hidden behind the familiar banking apps we use today. It would be a new, more robust financial plumbing for the world. So we have two powerful visions. One, from the Bitcoin standard, is a philosophical and economic case for sound money, positioning Bitcoin as a protector of wealth against the failures of the state. It's about returning to first principles. The other, from layered money, is a practical architectural vision for how Bitcoin could become the base layer of a new, technologically advanced, global financial system that integrates, rather than completely replaces, existing institutions. They are not mutually exclusive. In fact, they build on each other. Ammous provides the profound why, the historical and economic necessity for a system outside of government control. Bhatia provides a plausible how, a technical blueprint for building that system in the 21st century. One is the soul, the other is the body. Of course, challenges remain. The primary one is adoption. Why would central banks, the very institutions that control the current system, willingly choose to build on a decentralized protocol they cannot control? It's a valid point of skepticism. The incentive may come not from choice but from necessity, as the inherent flaws in the current debt-based system become more apparent. The synthesis of these two ideas presents a compelling path forward, a world where money is anchored in a predictable, scarce, and digital asset. A world where innovation can happen on top of this stable foundation, offering us choice and control over our wealth. A system where the long-term savings of individuals are protected from inflation, fostering a culture that values the future. This isn't about a get-rich-quick scheme. It's about a fundamental re-architecture of the trust layer upon which our entire economy is built. It is a deep and complex topic, but one that is becoming increasingly urgent to understand. Whether Bitcoin ultimately becomes the world's primary store of value, the base layer for a new financial system, or something else entirely, one thing is clear. The conversation it started is not going away. The questions it raises about money, freedom, and the future are now at the center of the global stage.